Today, my guest is Caitlin Casey from SEFCU Mortgage Services. We talk about interest rates, we talk about first-time homebuyer grants, and the future of the market. Take a listen. I'm Jake Garay from the Garay team with Berkshire Hathaway, and you're listening to my podcast, Selling the Suburbs. I'm sitting down with real estate agents, investors, experts, and various professionals throughout the industry. On Selling the Suburbs, we're discussing the truth about real estate, entrepreneurship, and the ever-changing housing market. Oh, Caitlin, thank you for coming. It's great to meet you. So for some of the listeners who don't know who you are, can you give us kind of your background, how you got into the mortgage business, just your story, basically?
Yep. So back in 2008, I just kept falling back into the restaurant industry and managing restaurants because after I graduated with my business degree, I had 7 years experience in the restaurant industry. So I came home, the market was crashing, everybody needed people to keep people in line, and I was probably one of the youngest managers that my company hired. So that was great. I was making crazy money, doing things I could do with my eyes closed. So it was really hard to get out of it, but I built a house in 2009, and my ex-husband now asked me if I was ever going to be home because I was working night, weekends, holidays. Pretty much my days off, I was close enough where I could run in and do inventory on my day off. And he was getting a little bit sick of it because he was like, we're building this house. Are you ever going to be there? And I was like, okay, I guess I need to make a change. So the credit union that I work for now would come in for their work meetings and holiday parties. And I would always be putting out, whatever was going wrong on the hotel side of my company. I managed the restaurant, but there would always be fires to put out on the other side during events, and they were short-staffed or whatever. And slowly managers at my credit union were like, you're really good at controlling things and putting out fires and talking to people and smoothing things out so that nobody even knows there's a problem. We need that. You should come work for us and whatever. And I was like, I don't know. I'm so old now. I'm 25. I don't know how I'm going to start over, just dumb. And when he started coming at me about being home more, I was like, well, I guess banking is 9 to 5, which I work more now than I ever did in the restaurant industry. But
real estate business is not a good work-life balance business to
Mortgages are 24/7. You guys call us on the weekends, nights, holidays, halftime.
365.
Yes, which I love. Like I was saying earlier, the restaurant industry is very paralleling to mortgages because I was already ready to work that much anyway, and I'm dealing with people's money, not their food and drink and money.
Right.
So it was a very easy transition. And so I took an entry-level position on the deposit side of the bank. I started in their call center because I wanted to know everything because I don't like not knowing everything. And the call center was a great way to learn a little aspect of every department, like financial advising, investments, mortgages, home equities, anything there was needed to know about banking. I pretty much knew a good base of it, like CDs and things like that. So during orientation, a woman that was starting the same day I was, but for the mortgage department, sat next to me, and I probably was in a orientation class with her for 3 hours, and she was like, you've got it. You've got to come over to the mortgage department. I was like, lady, you're crazy. I just told her the story the other day. She's the reason why I'm there now. And she was like, listen, you're a natural. You need to come over to the mortgage department. I was like, I've never been in banking before. I know nothing. I've never, this is the first time I'm getting a mortgage, is building the house. I know nothing. We signed papers and I didn't even know what I was signing. And she's like, I'm telling you, you're a natural. You've got to come over. And I was like, okay, you're crazy. And I never thought about it again. And then 6 months later, she was coming from a company in Connecticut and had moved up here. And she, needed that 6 months to get her license transferred over. And then she was moving up to a loan officer position. And I get a call from their manager over there. My manager received, and they said, hey, can you send Caitlin Casey over for an interview?
Without you asking for one?
Nope.
Unprompted.
Yeah, I'm very blessed. And Kara put her neck out for me and said, we've got to hire this girl. I'm telling you, it'll be an easy transition. And this was in the middle of the 2009 refinance boom. Rates plummeted. Everybody was refinancing. The market was falling apart. It was
Interesting times.
right. There was no time to train. There was no training course. It was just like sink or swim. Like if you can handle this load work, great. If you can't, see you later. So I assisted 2 of the top producing loan officers at that time. They hired me without barely interviewing me. And then I just was like, they said, okay, you got to do this. You got to assist for at least 2 years and then you can get your license. And then if you want to be a loan officer, you can. And like by year 1, I was like, can I get licensed now? Can I do this now? Like, I'm ready. Like,
Right.
cut me loose. And they're like, no, you got to keep assisting. And I was like, okay. Cause I could see what everybody else was doing. And I already was at that level probably
Felt like you could do it too.
Yeah.
Yeah.
I was ready.
What initially drew you to the restaurant industry?
As soon as I could get that card where I could work during school hours or like during the school year, I walked down the street and applied to the ice cream shop that I could walk to. I didn't even have my license at the time. And I said, hey, can I apply for a job? And Dave, my boss, who later on, once he was selling the ice cream shop, asked me if I wanted to buy it. But I was like living 45 minutes away. I was like, no, I'm married now. I got a real job, da, 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 da. I was like, I can't buy an ice cream shop. But that's how hard I worked for him when I was 14. So that just kind of kept falling into like hostessing, or maybe I never hosted, but I waitressed, then I bartended, then I managed. And that was just the evolution. And that's how I paid, my way all through college was, bartending late nights. And
The reason I ask is because we've seen it on the salesperson side.
Yeah.
A lot of parallels between people in like the hospitality and restaurant business.
It's huge.
And it's kind of like, my partner Blake and I, we talk about like, the different characteristics of the agents that we see who kind of make it and who don't make it, and like what makes a successful real estate agent. And a lot of the time, it's people in the restaurant industry or the hospitality industry because they are accustomed to kind of working odd hours, working long hours. You're surrounded by people all day long. And then athletes. Those are like the 2 things that seem to have like the people who are kind of self-starters, who take the initiative, who learn with trial by fire, so to speak.
Right.
And a lot
and
of
I could handle that pace.
Right.
Yeah.
It's fast paced. I know a lot of people who go into the restaurant industry say they do because they're people persons, whatever you would say.
Yeah.
And so I was just curious if that was it, and then that's what led to that transition.
For sure. Yeah. I mean, like I was bossing around 40-year-old cooks at the ice cream shop at 14 years old. I work well with others. I keep people on task. I treat people's businesses like my own. So, I mean, at probably 14, I was doing what I do now, and that was huge. Like when I got to college, there was no problem with me. Like I interned at Smith Barney my senior year of college. I was still probably waitressing and bartending 3 nights a week, balancing an internship, still going to school and class, and I was playing a club sport. So, I mean, that's just kind of how we're built, I think. And that is very paralleling to the mortgage industry because you have to have work-life balance. You have to be able to take calls on a Saturday, or when you're on a catamaran cruise in the British Virgin Islands, you're still taking calls as long as you have cell service. I mean, people in my industry have people cover them. I've never had anyone cover me ever. So I just work while I'm vacationing.
You just work all the time.
It's fine. It's great. I love it.
Well, the tough thing is if you don't answer those phone calls, they'll call somebody else. There's no real
within
loyalty.
2 seconds. Yeah.
And now with, the availability of the internet, Google, Zillow, all these different, places that they can find other people,
so easy.
It takes no time whatsoever to find another real estate agent, another loan officer who can provide what they feel is comparable service. Now, it may not be, and unfortunately, a lot of the time the consumers are hurt because they don't really understand what type of
they
service
should be getting
up front. And I think a lot of the general public isn't educated on the difference between, say, what you do versus what maybe the general, person at just the bank that you walk into,
Right.
your Chase Bank or something like that.
Right.
It's not really the same type of service that you're getting, but the average consumer doesn't know that. They're not aware of that. But you said something interesting, which I've never really heard anybody talk about, which is so you joined in 2009, roughly, and you said there was a refinance boom, obviously, because after the market crashed, the rates plummeted. Now, I talk about that time frame a lot with other agents who are in the business because I got licensed in 2015, so I wasn't in the business yet. But it's always like kind of the same thing, which was or at least around here, the market didn't really bottom until say 2011, 2012. So it was really just bad, bad, bad. Everything was bad. But obviously
We
there
were
was
great. Yeah,
there was refinancing. So I've never heard anybody be like, oh yeah, in 2009 there was a boom.
Right. And that's in our industry, we capitalize on that time because say, my parents bought their first house in 1983 and I think they locked into 16%, right? Like I get it. Like back then houses were only 100,000.
Right. That whole
everyone's like, it's all relative. I'm like, well, it's really not because they paid 500,000 for that $100,000 house.
Right.
Whereas I bought like a $400,000 house a few years ago and I'm going to pay 100,000 in interest. Like,
right.
I mean, it is not all relative. Like it is, we are very blessed to be growing up in this time with these rates being so slow. Like the rates are only in the low sixes right now. I dipped down into fives last week. But that's still epically low. And in 2009, the rates did come down. Like everybody was locked into 10%, and here they are going down into the sevens, maybe sixes back then too. And that was a huge amount of savings for people compared to who bought, before the market crash.
Right.
Like they were locking into 11%, depending on their credit score, So yeah, ever since I started, we have never slowed down.
Yeah. I mean, I was just going to say that was basically just 10 to 12 years straight through COVID of growth.
And I never stopped.
Right. And it's even now it's interesting because I think like you talk to people in the industry, whether it's at networking events, our team, we've stayed very, very busy. And if not, have only gotten more and more busy over the last 5 years, let's say. And yet, you see the number of transactions, obviously from a sales perspective are down in our market about 50% from the peak, 60%. Obviously in your industry, nobody's refinancing right now because they all locked in at 2 3/4 and 3 1/4. And
no one's selling their house unless like a spouse out or something. So that's tough, but people are still buying.
They are. And I think what the consumer, I go on a lot of listing appointments where I meet with sellers and they're like, oh, the market's really bad. And I'm like, no, it's actually not. Like your home is worth more than it was a year ago, 2 years ago. I was sitting down with a couple yesterday and they've been there for like 25 years. I'm like, your home is worth more than it's ever been worth ever. Right now.
Right.
And they had no idea because you see the news, you see the messaging, the market's down, sales are down. And I'm like, to be honest, the consumer doesn't care how much money their real estate agent or their mortgage loan officer is making.
Right.
They just care how much am I paying or what is my house worth.
Right.
That's really the only thing that matters to them. But the messaging, there's a disconnect between most people in our industry who are talking about, like, you seem very positive about rates, right? But if you go talk to most people who are not busy, who are slow, who are saying, oh, my business is so down because of interest rates. And it's like, there's no accountability for taking ownership of the fact that there is still a lot of buyer demand. Right. There is still a lot of people who are buying and selling.
Yeah.
And they're just slow because they're not very good at their job.
You got to pound the pavement in this market. Like you were saying, if I don't answer a phone call, they'll call someone else 2 seconds later. So I mean, like you'll talk to some of my agents, they're like, Caitlin picks up her phone at 11 o'clock at night if she's working, you know, and that's typically on Mondays or Tuesdays. So people know to hit me up. But if I'm working on a Friday because I am so behind, I will pick up my phone or I will say I'm on the phone and I'll call you right back because like you said, they can switch to someone else. Like there's so much at our fingertips right now. Same with real estate. I mean, Zillow is probably, I can't imagine the kind of market you guys go through to capture leads and hold on to them because everyone's coming at them with pop-ups and click per like it's
it's so funny that you say that because we just had a listing that was in contract. We took the house off the market, deal fell through, and we're relisting it today. It came off the market yesterday. It's going back in today as a new listing. And between yesterday when we submitted the paperwork at like 4:30 and today at noon, the seller had received 25 cold calls from agents soliciting them to list their house.
Even though they can see you listed it.
Even though, number one, they see that literally came off yesterday, we're relisting it today. Number two, cold calling is illegal in New York. Like, they're not allowed to do that.
Right. But it's like a free-for-all. There's no monitoring right now. There's no time for anything.
And it's unfortunate.
Crazy.
Like, we were talking about it we do weekly meetings, and, one of the agents was like, this is why we have such a bad reputation as an industry, is because there is no professionalism. It's just, let me harass everybody. You have those people who take the industry as a numbers game, and they're like, oh, if I cold call 100 people and get one, that's my business model, right? And they don't realize the 99 people that now hate everybody in our industry as a result of their solicitation and hard sales, and it's just bad.
Yeah.
And that's how we end up with, commission lawsuits and everything else that our side of the business is now going through as a result, is because of the lack of standards that people have.
Yeah, but you never were having anyone sign like a, one of those forms where it says like, I will not work with anyone else, because that's an aggressive thing to do too to your client. Because if personalities don't match, you don't want to make them upset and be like, now I have to work with this guy and whatever,
The ironic part is, a lot of the clients that I've dealt with, for example, I had a client I sold a home to earlier this year, and his relative was looking at the same time. And he's like, they really want to buy. Unfortunately, they signed this contract before we met you with this other agent for 9 months. And, the agent isn't available. They're not making themselves available on the weekends and everything else. And they're like, I feel like there's nothing that we can do. And
did you say that piece of paper is useless? Did you tell?
Well, they had a buyer representation agreement, and I tried to, say, well, we'll speak with them and we'll make an arrangement. We'll work something out with the other broker. But point being is like, a lot of the time the agents who are pushing that on their clients,
it's because they're not getting back to them.
Right. And that's the unfortunate thing, is the consumer ends up getting hurt by it because they feel committed to someone who isn't properly representing them. Unfortunately, I think our industry is going to go towards that direction where it's probably like in Connecticut, the required agents are to sign buyer representation agreements. And I think in New York, that's where we're going to end up going as a result of what's going on with some of these lawsuits and things like that. But it's unfortunate because the consumer is the one who ends up being hurt.
Right. Where they should just be able to go with whoever they want, whoever's working for.
Right. And what ends up happening too is, like I mentioned, talking to other loan officers, those are the ones that were not working on the weekends. They say, oh, I take the weekends off, and they're the ones that are slow. And it's like, unfortunately, if the buyers are out on Saturday and Sunday,
that's when people are looking.
And they have until Sunday at 8 o'clock to make that offer, and you're not getting back to them, they are going to call. Because I always look at it and say, buying a home is a huge investment. And the last thing I want to do is be the reason that those people didn't get that house because I didn't answer a phone call or I didn't get back to them soon enough. And when that's a major life moment, and for some people who are looking for something very specific, they may not see another house that fits their needs for 6 months, 9 months, a year. They may be having kids. Their kids may be switching schools. There's so many different implications that are playing into that scenario.
The last thing you want to do is not
screw that up.
Right. Yeah.
And it's just one of those things where I think a lot of it, people are looking at it like, what's in it for me, instead of looking at what their clients, needs are.
Right.
And I even from the day I got into the business, I was, when I was speaking with different loan officers and referring people, I would always tell them like, look, and you can tell me if this is right or wrong, but I would always say it's less about the bank and more about the person at the bank that you're working with, right? Because at the end of the day, that loan ends up getting sold 9 times out of 10, if it's a conventional or an FHA product, Fannie Mae product, whatever. It's all going to the same place,
right?
But the process of how it gets there, and that loan officer and how they communicate to you and make themselves available, that's really what differentiates. Like, you could call 2 people at the same lending institution and have 2 completely different experiences.
Right.
One works on your behalf, one goes above and beyond, one communicates, one works to make sure the deal can actually happen. And the other is, absentee, asleep at the wheel.
Right.
And same financial institution, 2 completely different experiences.
Yep.
And so it really boils down to who is that point of contact that you're calling, and how are they actually
getting back to you? Do you feel comfortable? A lot of people don't know that we're 100% commission too, so that's trouble. We had 35 loan officers, now we have 46 or so. There's a lot of overlap, right? But if somebody is more seasoned and they don't work on the weekends, do you really, want to work with that person? Because like you said, it's crunch time on the weekends. That's when people are looking. That's when open houses are happening. That's when deadlines are happening right now. This market's nuts. 4 or 5 years ago, it was a buyer's market, right? Now it's a seller's market. It is way more competitive now. You have to have strong offers. I don't even talk about seller's concession anymore. Like, Like people ask me, they're like, my dad said to ask about seller's concession. And I was like, well, your dad probably hasn't bought a house in 20 years. So I'm like, to be honest, it kind of went out of fashion in, 4 years ago when we started to go into this
type of
shortage.
market.
Yeah. I mean, this was before COVID. I stopped talking about seller. I'm like, I mean, you have to be competitive. You can't be asking for seller's concession, which no one understands what that is anymore because we don't talk about it. But when people are going in 40, 50 grand over ask cash, your seller's concession is not going to be competitive, and that's where it's important for people to get pre-approved a year ahead of time, because then okay, I've got to save X amount of money to even be competitive. Don't wait until you start looking for a house. Call me a year ahead of time. Call me 2 years ahead of time. Like all my clients know, I'm like, your pre-approval is fine. We'll just keep updating it. If you buy a Tesla, let me know, you want to get pre-approved a year before you're ready to start looking, because you need to know how much you got to save. Nobody on the internet or commercials or whatever are saying closing costs, down payment, whatever. They're like, buy a house, no money down. So people literally call me and I'm like, okay, how much do you have saved? And they're like, $150. And I'm like, wow, we have some work to do. Let's go over these numbers. And then they realize, then they're like, okay, we've got some work to do. And I'm like, okay, so we're not there right now, but in a year and a half from now, this is, if you listen to me and budget and cut out that $150 gym membership, we might get there in a year. So,
and that's what a good loan officer will do, is put them on the path to home ownership. And I tell people that all the time. I'm like, the first thing before everything, before you talk to us even, should be to talk to you and find out, what is the financial situation that you're looking at, right? Because you're going to need down payment funds. You're going to need closing cost funds. You're going to need a good half decent credit score, and you're going to need income, right? You need those three things. And if you don't have those three things, or you're missing one of those three things, it's going to impact your situation.
Yeah. Yep.
And so at least then you know what to work towards, and you have a goal to strive for, whether it's 12 months, 18 months, 24 months, at least you're on that path. But people want to kind of like, oh, let's just go look at houses and let's just see what's out there.
Let's fall in love with one.
Right. And then at that point, you have to break the news that, you don't afford that house.
Right.
You can't go out and buy that $800,000 home. You can buy the $600,000 home.
Right.
It's, then you're looking at what you get and what your price is versus what you're getting for that money. And, unfortunately for a lot of people, it disappoints them. So you kind of got to work through. And
that's what a lot of baby boomers now are understanding this market and helping their kids and remortgaging their houses and creating down payments. But on the other side, like you said, credit score, if you don't have that, if you have your parents' money, but you don't have a credit score, that's where
doesn't do you a ton of good.
Exactly. So even if you have money saved, you still want to get pre-approved ahead of time so that you're not wasting your time, you're not wasting your realtor's time, and you have a realistic goal set in front of you. And I spend most of my day credit counseling. So
I can imagine.
Don't pay one of those credit counseling companies. It's just a middleman that's taking money away from what, you could be saving. So just call me and I'll tell you what to do. Yeah.
Yeah. And it is relative in terms of the conversation within the context of like what's going on, right? Because I remember 2017 is kind of when 2017, 2018 is when we started to see the beginning in our markets of like the bidding wars, and like the nice homes that were priced properly would potentially get maybe 2 or 3 offers.
Right.
But it used to be, I'd meet clients, we'd go out on a Saturday or a Sunday, we'd look at 4 to 6 houses, and they could make offers on 3 of them,
right,
and then negotiate the best deal, and that was what they would pick. And that was like that for a while, and then
what a market that was.
For buyers, it was great. For sellers, it was a lot of tough conversations that, your house wasn't worth what they thought it was worth, and price reductions. And, we had a statistic at the time, it was, I believe, from like 2016 to 2019. If your home was on the market and did 0 price cuts, you would sell in roughly 30 to 45 days. But if you did 1 price cut, your days on market went all the way up to 180.
Right. Or if you didn't slap a fresh coat of paint or redo your floors or fix that fence or, now you can literally list a shack for, $250,000 and people are like, okay, I'll buy it right now.
Right. Sight unseen,
cash,
you'll get 15
whatever.
offers.
Yeah. It's such a crazy market. And that's what people keep asking me today. They're like, should I wait for the rates to come back down? And I'm like, they're really not that high. They're like for our generation,
Right.
they seem high because the government.
That's all we've been used to.
Well, there was no reason to bring the rates down to 2%, to be honest. I don't know why that happened. 5% was great. Everybody was happy. Everybody was saving money. You know, we all knew where we stood. Bringing them down to 2% just created the housing shortage to be that much crazier and competitive, because now you have investors that aren't making money in the stock market. You know, real estate, everybody could work remote now. Everybody's vacationing more. Everybody's like getting away from city living. So investors were like, well, my rate of return on this investment property is much greater than any stock that I'm investing in, or, you know, whatever that is plummeting right now. So that just exacerbated everything. And that's why the seller's market is still around. And if people continue to wait to buy, the pricing is just going to keep increasing and keep increasing, which is great. I mean, that's economy, and that's, you know, we're in an upswing, and, you know, it's better that we're in an upswing than a downswing.
100%. Yeah. It's unfortunately, and I do a lot of investor work, and a lot of new investors entered the market, you know, young people looking to buy their first investment property.
Right.
And a lot of them did very well because of appreciation and because of their low interest rates.
Right.
But, you know, that business almost ceased for the last 12 months. Interest rates went up, and all of a sudden, all those investors don't understand how to evaluate or underwrite a deal properly.
Right.
With,
it's
you
causing,
know, right.
causing issues.
And they're like, I'm having conversations with people. I'm like, you know, you're not that good at investing yet. You know, you bought good money. You didn't necessarily buy a good deal.
Right.
Right. Because you got a 3.5% or 3.25%, you know, percent interest rate,
right. So
30-year fixed,
much
on
lower
a
than what
two-family.
rent is. Yeah.
Right. You know, you happen to time it so that the price was the market price at that time before the appreciation. Rents went up significantly, 25, 30, 40%. And then you got really cheap money.
Right.
So you kind of like, it was a perfect storm, but don't expect to get that. That was an anomaly. It was not what
What's
you
happening
can be,
right now.
you know, expecting in the future. And it wasn't what happened in the past.
It was just luck. I mean, we all cashed in, we all profited. Like, it was a great time to be alive, you know, and like there were some days where I don't know if I ever went to bed. Like I had a roommate at the time, and she's like, "Did you go to sleep last night?" And I go, "I'm not really sure. My days are really blurring together," because I like a 24-hour turnaround time. If somebody applies with me, you know, purchase or refinance, I like to get back to them at an adequate time. And in my head, I'm like, I will get back to you within 24 hours. During COVID, I was like, "I'm so sorry. It might be a couple of days." And they're like, "It's okay, Kate." You know, like they're like, "We can tell you're answering your phone at 10 o'clock at night just to get back to us." You know, like I was like calling people back at all hours of the night. And I'm like, "I'm sorry, it's so late." They're like, "Don't apologize. We love that 2.5%, you know? So it was a crazy time. You know, we're still busy. I'm pre-qualling people like crazy.
Mm-hmm. Yeah, it's very active right now.
Yeah.
So you made a point before about pricing. Where do you see things going over the next couple of years?
If I knew that, I'd not be in upstate New York. I'd probably be in California by now. But honestly, we didn't anticipate the rates dipping during the holidays. So that was kind of great timing for a lot of people that, you know, searching kind of slowed down. So the people that were searching at this time, you know, great, they got a rate in the 5s probably.
Right.
We didn't anticipate that. I don't know, going into this election year, maybe we'll see another dip. But as far as the next couple of years, this train is not slowing down, I don't think. So there's no reason for the government to lower them except for maybe the election, I think.
Yeah, and I think I'm with you. I think prices are going to continue to rise in terms of home values.
Yeah.
If I was a first-time home buyer, I would definitely be trying to get my foot in the door now. And unfortunately, there was a lot of conversations like that back in 20 and 21, and a lot of parents and people advising these buyers said, "Oh, the market's going to crash. We've seen this before." And now, you know, that home that was maybe $330,000, $340,000 is now $450,000,
Right.
and their interest rate's twice as high as what it would have been then.
Right.
And that payment is, you know, double.
Right.
And now they're still renting,
And half the people we pre-qualified in 21 do not qualify for that price point anymore.
Right.
And that's where we're doing a lot of legwork in the background. Like, you know, we're trying to follow up with people. We're trying to instead of just printing pre-qualification letters. We're like, let's revisit the numbers. Let's make sure this all works because the rates have doubled. What you qualified for during COVID is not necessarily what you qualify for now or what you're comfortable with. Like you still do qualify for it, but are you ready for a $4,000 payment, depending on what the taxes are.
And on the flip side, if you got pre-approved in, October, maybe you get a little bit more now.
Right.
Rates aren't 8% anymore.
Yeah. That's what, when they went up to 8, I was like, we're really doing this.
Yeah. It was crazy.
Like I was saying, I couldn't really quote investor loans because with the multifamily hits and investor hits, it just kind of put us over the market where it was. So we were mainly, the government was forcing us to focus on primary homeowners, which is what they were trying to do. They were trying to slow down investors and help first-time home buyers, which I don't know if that's what I would have done, but I'm not a regulator. So
running the government.
Yeah, I'm just a loan officer.
So what are some of the biggest misconceptions that buyers that you're speaking with right now have? Like, what are the objections or the misconceptions that you're seeing that people have when they call you entering the market, kind of starting the process?
I think everybody just sees flyers about like no money down. Like I kind of went over that one.
Rocket Mortgage?
Yeah, sure. Yeah. We don't need to name names, but everybody knows who they are. We capture a lot of that business. We capture, we're a credit union. We're not for profit. We keep our rates low.
Yeah.
We keep our closing costs low, but there's still closing costs and there's still a year's worth of taxes you have to supply. There's, people are like, why do I have to come up with a year's worth of taxes? I was like, well, the seller's already paid the taxes for this year, so you have to reimburse them. And they're like, why? And these are all things when you get pre-qualified, I go over. Like a lot of my colleagues are like, why do you go line item by line item? Why don't you just tell them what the closing costs are and the taxes? I was like, well, when I bought a house, nobody explained any of this to me, and I bought it a year before I got into the industry. And I was like, why didn't anyone explain this? Everything adds up so quickly. Like, you need to save 20 grand right now. You need, before you even start thinking about buying a house, yes, there's grants out there, and that's what I approached you about, is there are grants out there, but you can't count on them because grants run out every day, right? You want to make sure you can get in this game by yourself without that kind of support. And there's so many, even though they're called first-time homebuyer grants, you might not qualify because you might be over the income limits because these people are giving out free money, but they're not making it easy. There's a lot of parameters that even loan officers don't know how to write loans with grants because there's combined loan-to-value ratios that no one knows about, right? And you don't know what product pairs well with a grant. You don't know what grant money is out there. You don't know the income limits or debt-to-income ratio limits or like loan-to-value limits that in the background, we figure all that out for you. And we make sure you confidently buy a house. But even some loan officers that got into the industry during COVID because it was nuts.
The flashy new thing.
Right. Same with realtors, I'm sure. Like everybody and their brother was like, oh, I'm going to do mortgages. I'm going to do real estate. I think it was more on the real estate side of things because you have,
The licensing is much easier.
Yeah. What is it? I don't know. 2 weeks seems like a really long time for me.
No, it's 75 hours and a couple of multiple choice tests and that's it.
Okay. Well, ours is 20 hours online and it used to be 2 tests, like federal and state. Mm-hmm. Now they've combined the 2, I guess. I don't know. That was a long time ago. But I don't know. Like I could never do what you do because I like not being home, like I'm always in a different state or a different country and whatever. But I'm, like I was saying to you earlier, like I pick up my phone even if I'm on Europe's time, like I make sure if the market's open, I'm awake and I'm picking up my phone because it is that competitive. Like I could never be home on the weekends showing houses,
hitting open houses, everything else.
That is not my lifestyle. I like to be able to work 24/7, but be
wherever you want.
Yeah. God bless you. I don't know how you guys do it.
It's one of those things that, and your career evolves, especially as an agent, because, like right now, my business is probably 75% listings, right? So I'm spending a lot more time with my team members, assisting them with their buyers, going out and listing homes and things like that. And I obviously work with buyers constantly as well, but your business kind of evolves as you go on, as I'm sure
as the market changes.
Yeah, exactly.
Right now I'm 100% purchase market.
Right.
Like no one is listing their house that is locked into 2.5 right now.
Right.
They're like, hey, can you give me your home equity guy's number? I'm like, sure.
Yep.
Yeah.
So you mentioned the home buyer grants for first-time home buyers.
Yes.
Can we talk about that a little bit?
For sure. So my company, we have like 3 or 4 experts on, Home Possible is a first-time home buyer product. Obviously, FHA, a lot of people know about. But there's other ones like Sunny May, I'm a specialist on, and I'm on the website, and they push us a lot. We're very blessed to work with them because there's a built-in grant with that loan product called a down payment assistance loan. So the minimum 3% that you usually have to put down as a first-time home buyer for conventional, they give you a grant with that for a little bit higher of a rate. Just like any grant product, there are income limits, there are loan to value ratios, there are debt to income ratios. So there's and you have to have like perfect credit. Like you have to fit in this perfect box, but make this much money, and that typically doesn't coincide. So like now that I've been writing them so long, I can just look at an application and be like, yeah, you qualify for this. Like everybody else is like, oh, how do I figure this out? Like there's so many facets to that loan product that it's really hard to just see like that. But because I was trained really well and my colleagues are so good at them, I've kind of become an expert with it. And we just had Federal Home Loan Bank just released our Homebuyer Dream Grant, which is a separate grant than the down payment assistant loan. So, and it caveats very well with Sunny Mae because they don't have total loan to value limits. Same with FHA, they don't have limits on how much grant money you can get or how much seller can, like there's a higher threshold for everything with those 2 products. And not a lot of people know how to write it. But the Homebuyer Dream Grant that just came out, we're kind of experts on that because we were with Federal Home Loan Bank when they did the mortgage match program, which I don't know if you've ever heard of that, but back in the day, you used to contribute, X amount of money, like $2,000 over a year or 2 years to a savings account every month or, periodically. And Federal Home Loan Bank would match it with $6,000. So you would start out having $8,000 when you're ready to search for a house. That was a huge deal back then. That was a lot of money. People complained how long it took. So I think Federal Home Loan Bank was like, all right, fine. We'll switch it so it's a lump sum, but you have to be in contract on a house in process when the grant money gets released. And if it runs out, it runs out.
Sheesh.
So now there's a whole nother element that I have to jockey around. And that's why I always say to people that I talk to about grants, I'm like, it doesn't matter if this grant becomes available because if it runs out, it runs out. And if we don't time it and all the stars align and you're a perfect candidate with this lower income, there's no point in talking about it, right? So you want to be prepared to buy a house without a grant. And then if you fall into it,
you get it.
Then you have a lot more money in your reserves, which everyone should always have reserves before buying a house too. So say you need 20 grand, it's always good to have, 5 or 10 grand to fall back on because that happy homeowning, as you know, is truly happy homeowning, and the roof's going to go and the water boiler is going to blow. And no matter how good your home inspector is, something is going to leak.
Right.
You know,
I mean, you don't know if the boiler, if it's older, if it's going to have an issue 2 weeks after closing.
Even if it's brand new, it could be a lemon, right? So there's so many costs above and beyond what your monthly payment is, above what your water bill is, above what, your garbage bill is and what your Wi-Fi is. Like there's always something, like there is no landlord anymore, right? There's no landlord to fix that.
Right.
And
call and hope that they come and take care of it for you.
Right. It's all on you now. So reserves are really important. And that's where that grant, if you're ready to buy this house without it, and then you get that grant, it's just like
icing on top.
Oh my God. And people can't stop talking about it. They're like, oh, I bought this house and then we got the grant.
Well, it's like free money at that point. If
Right.
it works out. So then you've got extra reserves, you've got that extra cushion to fall back on, or maybe you can go and do a little bit of renovation or a little bit of updating or paint the house.
Or go on vacation and not be house poor, right? Like, and the grant this year is $15,000.
Wow.
And in this allotment, it's probably going to run out pretty quickly. But I mean, if it all works out, and a lot of my first time home buyers, they have it on their radar. I give them the website. They monitor it. If the stars align that they are in contract and they are still under those income limits and everything works out,
Can you tell that it's about to run out? Like, do they publish how much of the funds are left?
No, it's just a crapshoot. So that's why I prepare my borrowers not to get it, and then when we get it, it feels great. Whereas other loan officers are like, grant, and then everybody's disappointed.
Well, then, yeah, if you underpromise and overdeliver, you look like a hero. But if you tell everybody that this is what you can do, and then you can't deliver on that, that's terrible. That's just,
it hurts a lot of feelings.
Yeah, and then all of a sudden, you have the people who do think that, or they think that they can buy, and they do need it.
Yeah.
And it's not like you're saying where if you can get it, that's
great. It's icing on the cake. Yeah.
Right.
And that's what a lot of loan officers are like, they advertise these grants, and they basically pre-qual a person based on them getting that grant, and then you've wasted all the realtors' times, all the attorneys' times, the buyers, the sellers, and then this thing doesn't close. Like, no one's going to refer you anymore.
And it gives the loan products and it gives the grants a bad reputation.
Absolutely.
Because I hear it all the time. I still all the time are arguing with other realtors when we have buyers on FHA loans.
Absolutely.
All
or
the time.
Sunny Mae. Sunny Mae had a bad rep for a really long time. And like, I think I'm slowly, turning those stones.
Yeah, I have a few
because,
deals in contract right now that are.
I'm closing Sunny Mae's faster than some conventional loans right now. So that means that Sunny Mae dug deep and did a lot of work and streamlined a lot of things. And realtors are all the time saying, ooh, Sunny Mae, I don't want to take that offer. And I'm like, listen, just give me one shot. And I'm slowly changing people's minds.
Unfortunately, what ends up happening a lot of the time is realtors go in, they meet with their clients, they set an expectation up front. So, we're not going to do any FHA loans, or we're not going to do any, Sunny Mae loans. And then they come in, they get the offers, and then, they end up in a situation where the seller prices the home too high, and then that's the only offer that they have.
Right.
And they're saying, this is the offer we got to take. And the seller is looking at them and saying, 45 days ago, you told me.
You said don't take FHA.
Right.
Right.
And now
that money is just as green as conventional money.
I mean, we do FHA loans all day long. And right now, for a long time, it was more beneficial to go FHA because you got a lower rate.
Right.
So it was like, for the homeowner, let them go that route.
Right.
If they're refinancing in 18 months anyway, the PMI for the life of loan doesn't make a difference.
And I understand where realtors were coming from. They didn't want to waste their sellers' time, right? Because sometimes if something was unsafe, FHA would blow it up and you'd have to fix it. It's like, all right, just slap a 2x4 on there and let's keep moving forward.
And a lot of the time what we were doing is setting the expectation up front with our clients. Like, hey, if it's up to $5,000, you go in and do the work. How many clients we've had who've gone into homes and, repainted a
banister or scraped and painted siding.
Exactly.
Every buyer is willing to put, at least $1,000 into it before closing, because that's not a risk. That's they can make it nice once they own it. If they're
going to do it anyway. They're just doing it 2 weeks before.
Right.
And so I think, unfortunately, there's a lot of realtors, in our business, there's a lot of people do it part-time.
Right.
And so, they don't do a high volume of transactions, so they don't have the experience, or they don't have the team of people who they can rely on to tell them accurate information.
Right.
So they're going on stuff, FHA loans take 90 days to close.
Right. They had one bad experience on a $100,000 listing, whereas
7 years ago.
This house is listed for $500,000. There's not a piece of chipping paint on that house, right? Every railing is good. Everything's turnkey. Yeah. FHA is going to be fine.
And in our market, what's really interesting is because we're on the cusp of, we have two markets that we cover. They have different loan limits. So we'll have buyers coming from, whether it be New York City or something like that, and they'll bring their agent up from the city, and their agent will have an FHA pre-approval for $700,000.
Right.
And our loan limit's $450,000.
Right. Exactly.
And I'm saying to them, do you realize that, this is not a valid offer on this home? And then the next thing you know, their credit score is too low, they don't qualify for conventional, and the agent's like, scorned.
Right.
And so you have a lot of uneducated agents who don't understand the mortgage process, the different products that are out there, the options that are out there. And unfortunately, once again, the consumer is the one who pays the price, because if they get with a loan officer who understands these things, explains them up front,
and the different counties, yes.
And that was what I was going to say, with these grants is how has the response been? Or, obviously you're very well spoken in them, so you understand them. So anybody that you're working with,
we're good to go.
Right, exactly. Whereas, what is your message, or how would you talk to a realtor who doesn't understand? Yeah, obviously the best thing to do is just talk to you and
let me take care of the financing. Yeah. And that's where a lot of realtors want their clients to feel protected and understand, what the numbers are or whatever. Like I love that they want to make sure their borrowers understand, and they're not, like I was saying before, what you qualify for might not be what you're comfortable with,
Right.
you know? So I love that realtors want to get involved and make sure their clients are well educated. But sometimes, I mean, every loan product during COVID, our parameters and our guidelines changed minute to minute. I mean, like our industry, if you don't stay on top of it, a guideline could change in 2 seconds, right? And we might not get a notification for it. We might, you know, we have an automatic underwriting system. And I'm like, why isn't this file running? You know, I run it every single time because that's how quickly things change. And you have to read the fine print and you have to, and then I'll like Google something and I'm like, did this change?
Right.
Yes, it did change. So now we have to shift gears and maybe we go FHA because, you know, that debt to income ratio does not work for that product anymore. So I would just say to realtors, like, just make sure you're constantly in communication and send me the listing, send me the actual taxes. Like, don't guess what they are. Pull it off the MLS. You have access to
Verify
it.
them.
Why are people not using the tools they have to make sure the loan officer knows, hey, these taxes aren't $4,000, they're $6,000, right? There was a veteran exemption, there was a star exemption, there was a senior citizen exemption that are not always clear on the tax bills.
Right.
Like star, easy, right? The elderly and the you know, the vet exemption is not very easy for us to catch all the time. So to work as a team is way more cohesive than working against each other.
Yeah, and I think if you're a realtor and you pick up the phone and you call the loan officer who wrote the pre-approval, you're going to find out pretty quickly if that person is
Responsive.
and knows what they're doing and
Right.
what they're talking about. Because, you know, if you get on the phone and they don't even remember the client, they don't know what's going on,
Yeah.
they don't remember anything,
Yeah.
and you can tell pretty quickly it's from one of those, you know, big lenders. Exactly. I always find it funny whenever I have a deal with any of them, because it's like one day you're getting a call from Michigan, the next day you're getting a call from New York, the
Texas,
next day
yeah.
it's Texas, then it's Florida.
Yeah.
I'm like, can we just get one person to call me and
Right.
ask these questions, and none of them communicate with each other?
That's my bread and butter. Like our local agents are like, hey, they have a pre-qual from Rocket Mortgage. Can you just help them out? And I was like, yeah, for sure. You know, and then 10 times my rates are lower, my closing costs are lower. I go through the loan estimate and they're like, man, nobody's ever done this with us before. And I'm like, okay. And then they're locked in for life. And then they're calling me on their second and third house. You know?
That's the difference in quality of service, right?
Yeah.
That's what really makes
If
it.
a computer is printing out your pre-qual letter and you didn't tell them that you pay child support,
Right.
you're screwed.
Yeah.
You know? And that's what happens with AI is
Things get missed.
right. You might think because your wages are garnished, you don't have to write that down, you know? And that's where the human interaction, like we talk about this all the time, like, is AI going to take over our jobs? I think it already is. I think we're getting there, but you know, I think Rocket Mortgage is doing a good job with implementing that besides everyone else. So they are going to do it one day, but there's something about that human interaction and knowing the right questions to ask and making sure no corners are cut. Like, sorry, I don't mean to.
No, and honestly, I agree. I think I don't necessarily see AI replacing everybody. I see it as kind of similar to what the internet did. So in our business now, there's agents who can handle 125, 150, 175 transactions
Right.
completely on their own.
Right.
In 1990, that wasn't possible.
No, because you're still dealing with paper.
Right. You didn't have the tools. You couldn't handle the
volume, the
exactly.
CRMs, everything.
AI will just do that, where you're going to see the gap between the top producers and the rest of the pack, so to speak, just continuing to widen and widen.
Right.
Because if you can implement those tools in your business and then add
Still
that
do what
personal
you
touch
do.
on top, that level of service where you can look past what the weaknesses of AI are, that business is just going to continue to get eaten up by those top producers. So I think that's what we're going to see happening over the next 5 to 10 years.
For sure, especially now that the boom is over and rates are higher. I mean, it is survival.
Now you have to have
of the
skill.
fittest. Right.
You have to actually
We're going
have skill.
back to our primal and
Right.
and if you aren't known, like you were saying, like somebody was saying earlier, they're like, Kaylin Casey, that's a great name to remember. And you ask all my clients who their loan officer was, they're like, Kaylin Casey.
Yeah.
You know, there's something to making sure you pick up the calls, making sure you know, if you are on a current call, text them and say, hey, I'll call you right back. I'm just on another call, you know, because then you're capturing them,
Right.
you know, left and right instead of just letting them go to voicemail. Like, have you left a voicemail in the last year and a half?
I personally always leave voicemails because it's my biggest pet peeve if someone calls me and doesn't leave a voicemail. So like if I'm in a meeting, like right now, if someone calls me and doesn't leave a voicemail,
Do they listen to it?
I always listen to them because that's how I know if it's important or not.
See, I'll call, they don't pick up, so I'll text and I'll say, hey, Jill.
My
it's
biggest
Caitlin.
fear though is going through all my missed calls and calling back somebody who's trying to sell me something because that happens all the
Yeah,
time.
yeah,
And then you get on the phone with 15
You're
different
like, oh, God.
salespeople trying to sell me leads and marketing solicitations and everything else. But no, I mean, honestly, most of the time, if someone calls and I don't answer because I'm doing something like this, I'm going to have a text message from them. I'll call them right after,
Right,
and that's the big thing. Or
Yeah.
send them, I always send every missed call. If I call them and they don't answer, I'll send them a text too
Right.
and say, hey, this is Jake
I was just
returning your
busy.
phone call,
Right.
just
Yeah.
getting out of a meeting,
Yeah.
so
Luckily, AI tells us when it's a telemarketer half the time, so
Yes.
that kind of helps too.
it does.
Sometimes people call me and they're calling from like a work number, so it does come up as,
Legit.
a telemarketer, and then like I'll pick up just in case,
Right.
Because it's a 518, and they're like, "Hey, it's Joe. Like I need a pre-approval," and I'm like,
Yeah, you can't trust it entirely.
"Thank God, thank God I picked up that time, and it's just we have so much information so quickly now.
And you're being inundated constantly with texts,
Right.
emails, phone calls.
Right.
So you got to sort through all that noise and get to the important stuff.
And that's tough. Like people in our generation are so reliant on text, and like on a Friday night, I'll get buried with like work, personal, my mom, whoever is blowing up my phone. And like if I miss a text, I'm like, oh my God, I'm so sorry. Can you try to email me? Because I don't lose emails, but my texts get buried.
It happens sometimes.
Yeah. It does. And then I feel horrible about it. And I'm like, oh my God, yeah. And I don't have that number saved. And then
Right.
the whole, the wheels fall off a little bit. But
I think everybody who's doing a significant amount of business has experienced that.
Right.
Because it's bound to happen.
Right.
Just technology is not perfect.
right. And I want to be able to have text message as a resource because it's so much easier.
And it gives you something to refer back to.
Absolutely.
Remember
Yeah.
the conversation
Right.
and stuff. So.
Right.
So for everybody who wants to connect with you, what is the best way? Social media, email, phone?
Yeah, if you just Google Caitlin Casey, SEFCU Mortgage Services, I'll come right up. I'm the only Caitlin in our division over here at SEFCU. And we're under the umbrella of Broadview, so it might come up Broadview. So if that happens, that's me. My cell phone number is 518-573-9058. That's the best way to get a hold of me. Give me a call. But hopefully we can help a lot of first-time home buyers or second-time home buyers or third. And if you don't fit in that perfect box, we still have other options for loan products if the grants don't fit, or we still capitalize on all of our products. So
Yeah, and you can help them get on the path to home ownership.
for sure. For sure.
Well, thank you very much
Okay,
for
thanks for
coming.
having me.
It was great meeting you,
Thank
and
you.
look forward to talking more soon.
Okay, thank you so much.